Hi, in today's video, I am going to analyze the budget, Union budget FY 27, 26, 27, which has been announced by Honorable Finance Minister yesterday. So I will try to highlight a few pointers which I found important and which can have short-term or long-term impact on the economy and as well as on the investment industry. So without wasting time, let's get into it. But I have a disclaimer before that. Uh, as I may name a few companies related to various sectors or various schemes announced, uh, I do not have any buy, sell, hold recommendation on those companies. If any investor or trader has any interest in the company mentioned in my video, must be consulted with any registered advisor or registered research analyst. Also, you may take your own call based on your own understanding, but I am not giving any recommendation through this particular video. So without wasting time, let's get into it. What I have found very important is the let me put it in this way. uh, how the budget was. If you ask me how was the budget, I would say it was an well articulated, very prudently articulated, well balanced budget, because there was like whatever limited room the finance minister had, so she has actually taken the uh, she did everything to push the economy, to push certain sectors to generate income and employment in the sector, considering India's growth, simultaneously keeping fiscal deficit within control, rather reducing little bit from, like we know that we had 4.4% earlier. So this time she, despite giving those economic booster, she kept the fiscal deficit target 4.3%. This is very important for us. And also, we have seen earlier that our central government debt to GDP is targeted to 50% plus minus 1%. So we are moving towards that controlled or reduced debt to GDP. So this is very another one important aspect. So at this juncture, we have no room for any fiscal slippage. We have seen what happened in Japan recently, right? There was bond market sell off. There was a crash in the bond market, which raised concern globally. Why the most stable Japanese bond market got crashed? That remains a focus area for global investors. Now the question is, uh, there are a few statements I've seen, some politicized statement that we didn't get this thing, general people didn't get this thing. This type of statements have already come in my mind, in my ears. So my point is, if we have given, means if the finance minister has given for political advantage, had she given some more expenditure, more uh, benefit to people, then it would have very uh, means it could have very dangerous impact in terms of fiscal slippage. So we again said we had a little room for that fiscal slippage, and rather I would say no room for any fiscal slippage. So that's why I said it's a balanced budget, keeping growth into mind, doing giving impetus to the growth, keeping fiscal deficit under control. So whatever the key spending has been announced. That is, one is electronic manufacturing system, vital for a Indian scenario when 90% of our PCBs are imported till date. So for indigenization, for self-reliance, we need to indigenize EMS. Government has announced 22,900 crore outlay for electronic manufacturing system. Very important. So already a few companies are there who has their facilities running, but contribution in terms of total requirement is nominal, so they can expand with their existing facilities. They can set up, they can increase their line, they can set up greenfield facilities. So it's a big booster for the electronic manufacturing system. Semiconductor ecosystem got 40,000 crore outlay. This is, we know that India is keen to set up semiconductor because we have seen the global supply chain disruption in the semiconductor system, and our auto industry was badly impacted. And it's not limited to auto. There, like many other industries are getting affected for the semiconductor thing, and so we need not to be, means we should not rely on foreign supply chain. Rather than we should build the ecosystem in house, and that's why this 40,000 crore outlay becomes very important. Government has announced 12.2 lakh crore of public capex. Very important for us. It's an infrastructure capex, and it's an increase from earlier probably 11.1 lakh crore. So whatever requirement was there, that has been given. Now defense outlay has been kept 7.85 lakh crore versus 6.81 lakh crore. It's a 19% increase, but point is, uh, probably industry is not happy because some projection was for 30%, but it is actually 19%. So again, keeping a balance becomes important. Now, basic custom duty has been exempted, or certain changes has been brought into picture for certain areas. So BCD has been exempted into 55 groups of critical minerals. We know this is how important is this when this rare earth, we have there is a global dependence of rare earth on China. So rare earth, scandium, yttrium got duty nil. Battery and tech mineral like natural graphite, lithium carbonate, cobalt oxide, silicon uh, has been included in the first schedule of means they will get a permanent tariff line. Then comes some tariff, like for distinguishing if certain import of certain materials. Let's say it's data tracking of certain materials, some tariff line has been created. So hafnium ore and concentrate, duty nil but specifically mentioned, means government will monitor the import of hafnium ore and concentrate. Another one, ammonium metavanadate, got duty of 2.5%. Now, BCD exemption for capital goods used in manufacturing of lithium ion cell, it was there. Now it has been extended from lithium ion cell to BESS, battery energy storage system. So we are very much vocal on BESS. We have seen lots of government declaration on BESS because government is keen to make this battery energy storage system within the country, because we know that storage of energy is the biggest challenge. So if we can store up to a certain extent, it may replace our fossil fuel requirement up to a big extent. So we will store that renewable energy, because renewable energy, especially solar, we know that solar is produced in the daytime and nighttime it is not produced. So we are uh, looking for hybrids, but BESS can make the may bring a big change in the entire structure of our power generation. So it is important. Next is BCD exemption for goods required to set up nuclear power project We know that, okay, so it was there, let me tell you, it was there for 20, till 2027. Now it has been extended to 2035, and we know that we have, government has a target of 100 gigawatt of nuclear power generation by 2047. So this is important. Companies like Valchan Nagar, they are into this nuclear power components, power generating components. Now, BCD exemption for raw material and components for manufacturing, maintenance, repair, and overhaul of aircraft and aircraft engines only for PSUs. Guess which company it is? Obviously, Hindustan Aeronautics Limited will get benefit out of it. uh, very big booster for coastal and inland shipping policy. Now it's a change in policy. What the tweak they did, the finance minister did, that is extension of tonnage tax scheme into inland waterways. Earlier, tonnage tax was applicable for vessels going to the sea. Now it has been applied to inland waterways. So what is the benefit? Benefit is, inland vessels are small, relatively small, and tonnage means the tax is not computed on the actual whatever size of cargo you are transporting, or whatever the net profit you are doing. It is based on your size of your vessel. So naturally, as inland vessels are relatively small, and like, so far tonnage is applicable to big vessels, so considering that there will be some tax benefit for vessels going to inland waterways. Now, customs duty reduction on key inputs of aquaculture. So prawn and shrimp feed from 15% to 5%. Import duty for Artemia and Artemia cyst, critical for fish and shrimp hatcheries, eliminated from 5% to nil. Value limit for duty-free import increased from 1% to 3% of FOB value of seafood product exported uh, in the financial year. So this is a booster for companies who are exporting. We know those companies. I shall not name them. Some seafood means shrimp culture companies. Their focus is US and Europe. Like, the biggest market is US, but some of the companies are focusing into Europe as well, along with the US, because US now it's 50% tax. Despite that, some of the companies have posted very good volume. So considering that, this custom duty relief or reduction will play a crucial role. Now let me tell you, there was one biogas related declaration that the purpose of okay, now BCD exemptions have been extended until March 31st, 2028 for machineries and auxiliary equipment required to set up projects for power generation or production of compressed biogas, bio-CNG, using non-conventional materials. So biogas companies will be, means companies who are setting a biogas plant, they will be benefited, and obviously like, this will reduce the tax burden, means companies who are setting up will get more orders as well. Now, for the purpose of computing central excise duty on blended compressed natural gas, the value of biogas or compressed gas contained in the blend is now excluded. Now, let me explain you. The government's target of this biogas blending is 5% in the total CNG. So this 5% blending, the means that is the target. Now whatever the blending is probably around 2.5% now. Now whatever the blending the companies do, like the companies like HPCL, BPCL, they do the blending, right? So this blended part of the bio CNG remains GST free, at this point, means till the budget announced. But post budget, from I think it is applicable from 2nd of February 2026. So it's not only GST, whatever other tax, central tax, excise duty, whatever is applicable, central tax, state tax, union territory tax, or integrated tax paid on the biogas or CNG, that will be completely exempted. Early, means earlier it was only GST exempt. Now all taxes will be exempt. Uh, Another one very big change I would say has been brought in, that is container tracking container data, measures to categorize and regulate the import of containers, specifically focusing on refrigerated units. Basic customs duty for these refrigerated materials has been brought and set at 5% effective from May 1, 2026. So what will happen with this, that Indian container manufacturers, very limited listed companies I know are there, they will get benefited out of it. So this import of containers not used to be tracked, so there was no tariff line for this earlier. Now it will be specifically monitored, and some tax also has been applied to specifically to those refrigerated containers. So these are very important developments happening. And another one thing I would say, this, yes, this is important, that MAT paid on MAT paid by the company, by a company under the old tax regime, is now designated as a final tax. मतलब जो हो गया सो हो गया. Meaning taxpayers can no longer generate new MAT credits while operating under the old scheme. So insisting for switching to the new regime. These were very important declaration, I would say. Acha. So basic customs duty on specific goods used in the manufacturing of microwave ovens has been reduced to nil. So motors, electric heating resistors, transformers, some parts are got actually duty exemption. This is applicable from today, 2nd February 2026. So I think I have largely covered whatever the key declaration was there. So I hope you find this video informative. If you like if you really found this video effective, then like the video and don't forget to subscribe to the channel for getting analytical and informative videos. Thank you.